Welcome to Ready Set Crypto. This is your brain on blockchain. The four most expensive words in the English language are "this time it's different," identifying when things really are different and when the collective madness of the crowd is in full force is the difference between sitting out a rally or participating in it. So what is the formula for recognizing what "this time it's different" really means? Well, the answer is 2 parts math and 2 parts psychology. The math part begins with the traditional formula for valuation, most simply expressed as price relative to earnings or PE ratio. I also said that the formula was 2 parts psychology. The first part takes place during the booms. The second after the inevitable bust. Greed is replaced by fear. Risk aversion occurs, and the recent past dominates investors' collective mindset. There's been a lot of studies that show that the average retail investor actually has a negative alpha, meaning their returns versus the benchmark are a negative 3 to 9% a year. Why? Well, because we're emotional, irrational creatures, right? Human nature is unchanging. During the boom, greed dominates. After the crash, the residual emotion is fear. So investors need to recognize when the economic environment really is different. And this time, it really truly is different. Never in anyone's lifetime have we witnessed anything like this before. Never have we seen the entire world come to a complete stop like this. It's simply incomparable to 2008 and more reminiscent to wartime than any sort of recession or depression. To have a supply-side shock, demand-side shock, and consumption halt all at the same time. And it was IMF economist Rudy Dornbush who said to Congress in 2012, "The crisis takes a much longer time coming than you think, and then it happens much faster than you could have thought." Side note, he also wrote the macroeconomics textbook I hated in college, so thanks, Rudy. To that end, let's look at the macro level. For the second time this century, the world is facing an acute shortage of dollar funding. And this is a big problem. An enormous amount of global financial activity depends on the use of the dollar. If we are to contain the fallout from this economic crisis, America's central bank must act as a lender of last resort not only to America's financial system, but also to the entire world. Ever since the Bretton Woods Agreement in 1944, other major governments and central banks have relied on the US dollar to back up the value of their own currencies. Through its reserve currency status, the dollar receives extra legitimacy in the eyes of its domestic users, currency traders, and participants in international transactions. So what does all of this have to do with the coronavirus? As panic has swept through the financial markets in the last month, investors have begun seeking safety in cash. Cash is king. And above all, in dollars. The American economy itself may look weak, with Q2 GDP estimated to be down 30%, but the dollar is still the most universally acceptable means of payment and store of value, especially in times of crisis. And the crisis is still unfolding. The outflow from emerging markets in recent weeks has been more rapid than ever before in history. To stop further losses, it may be necessary to adjust the liquidity swap line system, which is the main way dollars are piped into the global financial system. Doing so is crucial. The effort to respond to the pandemic must not be hampered by a crisis of the dollar-based financial system. And what's at stake is not just the economic stability and the credibility of American financial leadership. It's truly a matter of life and death. And it still won't be enough. Less available dollars in a world of massive dollar shortage dries up the dollar, creating a shortage both home and abroad. This is because money printing does not make the dollar available. They get stuck in the financial system and hoarded. Money for the banks and no money for the debtors. The domestic shortage of dollars means that money gets hoarded when defaults rise. Already we're seeing a 2,000% increase in requests for mortgage payment delays, and 33% of American renters didn't pay their rent this month. The dollar shortage abroad means that $13 trillion of debt scrambles for the available dollars as world growth slows and banks are less free with capital. The $13 trillion in short dollar positions, foreign dollar debt held mainly by foreign corporations and investment vehicles, is the largest position ever taken out in the history of global financial markets. What this and many other factors point to is a massive, uncontrolled dollar rally. And quantitative easing will not fix this. Liquidity swap lines will not fix this. It's the dollar system that really is the big problem. The dollar has eaten all of its competitors, and now it's going to eat itself. This eventually breaks the dollar after a super spike in demand, as global central banks are forced to find alternatives. They're already working on digital currencies for exactly this reason. And so the biggest event of all of our lifetimes has now become clear, and I believe it will most likely play out in 3 acts over several years. First, the panic, which is the liquidity phase and the phase we're currently in. Then the hope, which is the correction phase. And finally, the insolvency, the largest insolvency event in history. The brutal phase that changes everything, including the system itself. To try and hedge against this, that's why we're looking to build a portfolio that has dry powder to trade options on equities, a position in gold, and a position in Bitcoin. Why that is that Bitcoin is not a hedge to pandemics, it's a hedge to fiat regimes. A sudden negative demand shock in the global economy will affect every asset, including gold, in the short term. The world will get through this, but at what long-term cost? What bargain of rights? Well, Bitcoin's not making any deals right now. It has the resilience and endurance to last the infinite game. And eventually, the argument that Bitcoin lacks intrinsic value is likely to weaken, as its non-confiscatable characteristic, decentralized nature, and fungibility will add to the asset's value. This is the main reason I'm more convinced than ever of Bitcoin's future outlook. The macroeconomic factors that I thought would happen have actually happened. They're just materially worse than I thought they would be. No one foresaw this bad of an economic situation, which means that no one thought we would have to see the government move so aggressively to drop rates and print this much money. And so yes, this time it is different. We are not owed long-term growth, we have to earn it. We have to keep on innovating, keep on becoming more efficient, and also seriously address some major systemic issues. There are a lot of people that are being hurt right now due to the macroeconomic situation. Bitcoin is only one part of the story. My conviction is unchanged. The data, the price drawdown, and the macro environment are what is driving that steady hand. But do your own research, educate yourself. No one is looking out for you right now. So stay alert and please be kind to those around you. And if you haven't seen, we've started a new community that is strictly around creating a system to generate consistent returns. We've called it Ready Set Trade, and it's really focused on how to cut through the noise and the BS in this very volatile and uncertain time. Success in these markets comes from the right combination of knowledge, capital, and time, and that's precisely what we want to help you do to find edge in the financial markets. So if this sounds at all interesting, head on over to readyset.trade, and don't forget to use coupon code LAUNCH at checkout for a 20% discount. Locked in for life. We look forward to you joining us and growing together, especially in these trying times. So as always, thank you so much for watching. If you liked the video, please give it a like, and don't forget to subscribe if you haven't done so already. We really appreciate the support, and it helps us keep making videos like this one. So thank you. Until the next one, I'll see ya. Cheers.